Let's put the spotlight then on credit card management fintech. That's Kiwi. The company has raised close to $13 million in the pre-Series A funding round. That's been led by Omidyar as Network India, and they plan to expand their credit cards on UPI offerings. We've got with us Mohit Bedi. He's the co-founder and chief business officer at Kiwi on the show. Thanks so much for taking time out. Start by walking us through who the investors are that have participated in this round and what the total fundraise details are.
So hi Avan, thank you for having me on the show. There were already existing investors, which was Nexus and Stellaris, those who had invested us and put faith on Kiwi during the seed round. So they've actually done a pro rata investment in this round as well. And we've got a new investor in form of Omidyar. They've invested in this Series A round.
So Mohit, what's the game plan in terms of utilization of the funds?
So obviously, in the first round, when we had done seed, we wanted to launch the product and do a product market fit. We've got really good feedback from users. People are using our app, and we've done it in a controlled manner right now. Obviously, this second round of investment that has happened in Series A, we want to obviously invest in growth. This would mean some amount of talent that we will get on board. We will also invest in technology, and we will invest in partnerships. So all these three initiatives or investments are linked to growing the business, and that's the plan for the next 2 years.
Now, Kiwi was the first fintech company in India that actually launched credit cards with UPI. Tell us a little bit more about what is going to be the next big trend or the next big breakthrough that you guys are looking to adopt.
So you're absolutely bang on. We launched the credit on UPI product when we started off, and we want to scale that product because that's the product, that's our bread and butter product. But what you will see is we will start upgrading the UPI experience for customers as far as credit is concerned. So you'll see much more consumer-friendly products, which is like EMI on UPI. The When you go to stores and you buy electronics and consumer durables, you get 0% EMIs and all that. So you'll see a lot of EMI on UPI kind of products. There is a approval that RBI had given on credit line on UPI, which is very different from credit card on UPI. You'll see us entering into that product stream also. So our mantra is credit on UPI. We've already pioneered the credit card on UPI product, and that's what we intend to scale with banks, whom we will partner afresh, new banks as well. But you'll also see we will start upgrading your credit experience in form of EMI on UPI and credit line on UPI. And that's what we are closely working with our partners, which is NPCI and the banks.
You know, your funding is also coming at a time when the Reserve Bank has actually told banks to remain a little bit cautious about unsecured lending. So what exactly would be your view on the same?
So obviously, it is always better to be prudent as far as unsecured lending is concerned. But most of the banks, especially the banks we are partnering with, like Axis, etc., they've already been doing a lot of prudence in terms of lending, and there are credit bureau reports, etc., which will tell you that their loss indicators, etc., have always been much better. The only difference is now your cost of capital will increase due to these interventions, but it is a very prudent move. Unsecured lending is the first product where customer defaults, right? In your hierarchy of defaults, if you have a home loan product, if you have an auto loan product, etc., the first product you decide not to pay for is an unsecured product like credit card and personal loans. So it is obviously better to be prudent because the share of unsecured lending had gone up. But these were sort of stray cases where NBFCs and maybe smaller banks were trading the fine line. But as far as the banks we are partnering with, they are large banks and they are very well secured, and they have been always known for their prudent lending.
Now, you have more than 5 lakh registered consumers, I understand, on the platform. Tell us about how many customers you've disbursed these credit cards to. What is the outlook in terms of what you plan to clock in for your gross merchandise value?
Yeah, so we are a credit on UPI, and our core business is to issue credit cards, right? So we are a TPAP, so we get both savings account and credit card customers. So we are getting close to 2 lakh to 2.5 lakh downloads every month. We've already crossed 25,000 credit cards with Axis Bank. So that business is doing really well. The credit card business is where you actually make money compared to any other UPI product, correct? So we've already got 25,000 cards compared to other card indicators, especially let's say when you compare to SBI cards key indicators, which is spends per card, transactions per card, etc. Our indicators are also far better. So for example, our spends per card is closer to the range of 22,000, whereas the retail spends per card for a SBI card kind of entity is around 8,000-9,000. So we're getting very good response from the customer. In fact, our average transactions per month per customer are 17 to 18 transactions per month. So we've got a very engaged, high spending customers thanks to the awesome product that we've built. So as far as credit card is concerned, we've now got a product market fit. As I was telling you, the key indicators are really good. The plan is now obviously to scale this. In the next 12 months, we want to touch 500,000 or more credit cards during this period, and obviously partner with banks and NPCI and help them issue these cards in a very prudent manner, as you were mentioning.
And what is the average spend per credit card, per month on the Kiwi platform? How many transactions do you clock in currently, and what's the game plan in order to increase the traction?
So average spends per card compared to industry average of 8 to 10,000, we are already double that average, right? We are at 20 to 22,000 spend per card per month. Our average transactions compared to the industry, where, see, this is a UPI product. It's a very good engaging product where you can spend on QR, right? You can go to your corner shop, you can go to your vada pav wala, or you can go to your golgappa wala in Delhi and spend on this, right? So the ecosystem is much bigger as far as acceptance of credit card is concerned. So our average number of transactions are also almost double that of a regular credit card business. So we're already seeing 17 to 18 transactions. So we are happy with these indicators right now. The plan is not to grow spends per card and transaction volumes. The plan is to actually increase the number of cards and get more customers onboarded on this platform.
Right, and as you said, you have partnered with Axis Bank and you're looking to add more partnerships in the coming year. Tell us a little bit more about, which banks that you're in talks with as of now. Has anything been finalized on that front?
So we are talking to at least 4 5 banks, but by law of averages, we'll probably close at least couple of banks in the next 6 months. So we are talking to largish banks. We are in good talks with Yes Bank and other public sector banks. So right now it's not in a very close stage. So revealing the names won't make sense because they are still at sort of a mid-level stage. But our target is to at least close couple of banks in the next 6 months.
Right. And, Mohit, given the fact that the number of the unique UPI users is nearly 8 to 10 times that of the existing credit card users in India, how are you looking to really capitalize on that opportunity? How many customers are you looking to onboard by CY 2024?
So you're absolutely bang on. Let's say the unique credit card users are close to 30 to 40 million in India. The unique mobile numbers on which UPI is there is around 330 million. So you're right. The comparison of number of customers is exponential, and which is why we've actually taken the investment from Omidyar in terms of trying to reach the population which are not really which do not actually get credit card at such ease. See, we are a digital platform. We issue virtual cards only. There's no physical card. So our reach and going deeper into the market or deeper into India is much far more superior than any other cards business, correct? So the plan is obviously to try and reach out to tier 3, tier 4 cities, because usage is also not a problem. Like you said, the number of unique users compared to credit cards and UPI is at least 4 5x. In fact, the acceptance ecosystem, if you see the RBI data, is actually 35x of POS terminals in case of UPI P2M, correct? So both number of customers and number of people accepting the UPI credit card is much higher. So the plan is obviously to go deeper into India, and in the next 3 to 5 years, we want to at least touch 2.5 million customers by way of giving them credit on UPI.
So what is the details when it comes to your financials? Can you walk us through, your profitability timeline and the kind of growth targets you have in mind?
So it's see, we are like a typical cards business. The revenue models are based on fee income, etc., everything, distribution income, and various other parameters. So you will a credit card business is a J curve P&L, right? You have couple of years of losses and then break even, and the payback comes in around 3 to 5 years. So the plan is we are planning to stick to that, right? You'll have losses for a couple of years, but by the virtue of credit card business and the P&L thereof, we are expecting to get to the break even stage in around 18 to 24 months, and then you'll see profits coming into it. But it's all a factor of how many customers we acquire, and our key indicators stick to what we are doing right now.
And I also understand that with more banks coming on board, you are looking to expand the services to new users. You're looking to expand in tier 2 and 3 cities. Tell us a little bit more.
See, we want to, and that's a very good question, because that's where we want to achieve our growth from. But in the next 12 months, we want to do more than 500,000 cards for sure. And that's the plan. We want to aggressively grow from the investment we've just got thanks to Omidyar, Nexus, and Stellaris. But that's the plan for next 12 months. But if you look at a 3 to 5 year outlook, then we want to at least start touching 2.5, 3 million odd customers during this period. And obviously, we want 50 to 60% of this coming from tier 2, tier 3 towns.
Thanks, Mohit. Good to have you on board. Thanks so much for joining in on ET Now. All right, let's move right